Hello and welcome to Copytraders Club, where you can learn how to make more money copy trading. I am Gavin Macaulay, my name and username on eToro. Like you, I copy trade, and together we can learn from others how to do it better and have some fun. Here we go. Welcome to episode 3 of Copytraders Club, and we have a special treat today, as it is the historic first ever conversation episode, and it will be with the guy who is the reason for me being on eToro, Karan Mohan, aka Samosa King. He's visiting us today here at the Copytraders Clubhouse. I can see the limo pulling up now, and here he comes. Karan, how are you? Welcome to Copytraders Club.
Hello, Gavin.
Well, it's great to have you. Thank you for joining us. It's a thrill to have you here as our first ever guest here at this Copytraders Clubhouse. Before we proceed to the VIP lounge as a guest, you need to be signed in, okay? And that is done.
Sounds good.
That's done by answering a series of quick-fire questions. Are you ready for those?
I am.
Okay. Username on eToro.
Samosa King.
Date you joined eToro.
1st of June 2020 was my first trade.
Year of birth.
94.
Marital status.
Not applicable.
Kids.
Not applicable.
Location.
UAE.
Profession.
Investor.
Name one of your investing heroes.
Can I name 3?
Sure.
Joel Greenblatt, Michael Burry, Bill Ackman.
Name one of your favorite investing books.
The Zurich Axioms. It focuses on risk management. It's a really good book.
Okay, fantastic. Well, that completes the formalities. Let's proceed into our VIP section here at the clubhouse. We're going to walk over the marble floors, past the charming fountain, and into the splendid Copytraders Lounge. Samosa King, are you ready for this magical transition?
I am. Let's do it.
Here we are now in the lavish surroundings of the VIP lounge, so we can sit back and relax here. Karan, just have a good old chat. Why don't we start talking about how we met?
Sure. So through YouTube, you had a couple of comments in a few videos where mainly it was like investing with Tom and Brad Kalino, stock compounder. And we kind of connected through the comment section. And then I guess it kind of went from there to eToro and then now to here, the Copytraders Club.
Yeah, there seems to be quite a network of similar-minded investors on YouTube. As you say, investing with Tom, Brad Kellner, stock compounder, you. And we bonded over discussing, in particular, Seritage growth properties, didn't we?
Yes. Monish Babra's big pandemic bet.
Yeah. Well, I mean, I think the reason we were all interested, or certainly one of the reasons I was interested, was because of the number of super investors who were participating.
Yeah.
Like there's five big named guys.
Yeah.
We were all excited by that.
Yeah. Seritage has this glow around it. Like I think Guy Spear put it the best way. It has this aura around it that you've got Warren Buffett and, Monish Babra and Guy Spear also, and Eddie Lampert, of course. All these huge investors, well-known, respected, value investors in this one small little 500 million company. So, I mean, it's not 500 million now, but back then, yeah.
And now there's also a little group of small YouTube channel hosts also invested in it.
Well, yes. Those who have disclosed a position, yeah. Few of us have.
Mm-hmm.
So,
okay, so we met talking about that, and that put me onto your YouTube channel, and I started watching some of the videos you make.
Mm-hmm.
And I enjoyed those.
Thank you.
every YouTuber has a different style. Yours is very calm and composed and thoughtful. It's not glitzy, it's not showy, but it's all good quality content. I enjoy them.
I appreciate that.
And
Thank you so much.
and you were, well, I'll leave a link obviously to your channel in the show notes, as well as a link to those other two that we mentioned a moment ago. I'm on your feed now. Samosa King, Red Star, risk score of 3. It says
In the last 7 days, yeah.
On your bio, right, for the last 7 days. Hello, thanks for taking the time to read my bio. Profession. I'm a full-time investor. I have been an entrepreneur and in love with business and understanding businesses since the age of 13. 13.
Yeah.
Okay.
I know it sounds unusual, but I pretty much had my first entrepreneurial sort of experience back when I was 13, and it really wasn't by choice. So it was more of there were some financial difficulties. At least I thought there were some financial difficulties, and I felt like, okay, I had to bring, something. Like I had to contribute in some way. So what I happened to do was we have something in the UAE which is called Dubizzle. So it's similar to Craigslist that the listeners may be familiar with.
Mm-hmm.
So you can list things on the internet and put up a picture and then sell items. And so what I happened to do was I went around to the souks, the bazaar, so the shops kind of in the area, and I would take pictures of artifacts and household items. Like I've sold everything from like pots to like, what do you call those artifacts, like daggers, like for display and stuff. And I would just take pictures and then post them on this website and get a call and then take it from one place and then just kind of deliver it and make that little commission in the middle. So, and back then there were no iPhones, right? So this was a while back. So we all had the Nokia phones. So are you familiar with the E63?
Of course, sure.
Yeah. So BlackBerry was like kind of expensive at that point, and the Nokia E63 was like, okay, like the copycat version of that, the cheaper version. So that's what I used to use, take pictures and then upload those. And it was a great business because, I had no inventory. Like I could just take the products from one place. Yeah. Everything was on consignment, on credit, and it was cash on cash, So
yeah.
And then it kind of grew. So I started that at like 13 and continued to like 16, 17. And I actually started recruiting friends within my high school to, make deliveries for me, and then I'd kind of pay them a cut.
Wow.
And that was a good experience. It was a good learning experience. That was the first business. And then after that, I kind of gotten into another business, and I was going to university. So yeah, went on from there.
Wow. Well, that's the first chapter of your book written for when you become rich and famous. How it all began. My entrepreneurial early teens.
Yeah. People were busy doing other things, and I'm here, like making, sort of trying to do business and making more money than a lot of my teachers at that point, which was fantastic.
Wow.
Yeah.
Well, you're way ahead of yourself. I mean, you're still only 26, and you're going places. Let's carry on with this. Education, undergraduate degree in finance and CFA level 1. Tell us about your degree in finance and how useful that is to the life you now find yourself having.
Sure. So I actually started off with a degree in electrical engineering. And so I did that because our business that we're in is in the electrical engineering space. And it kind of was like a natural path, for me to just get into electrical because everyone in the family is into it. I did that for some time, and turns out, yeah, I did a few finance courses and it resonated a lot more with me. So the switch was obvious. I'm clearly happier being here. And whatever you're drawn to, whatever resonates with you, you just gravitate towards it. So that just happened to be finance. And the undergraduate degree was definitely good to learn about the academic finance part, but yeah, not as much when it comes to real practical investing. So, but it's a good base.
Okay, location, resident in the United Arab Emirates and citizen of India. Minimum copy amount $500.
Right. That's actually been increased by eToro recently. So minimum actually for me was 200. You could cover all the positions with 200 because none of them are really small positions.
Right.
They're all like significant conviction, based investments. So
Is that something that's important to you to be copyable by everyone, or is it a result of your style?
no, I wouldn't invest any other way. Like at least, you can't say you have a good conviction in a portfolio position and just have like 0.2% of your portfolio in it. Like it doesn't do anything. So no, it's not. I didn't invest based on how much of it could be copied. It just happened to be that way. Yeah. So I like to put in at least like 5% of the portfolio into any one idea. Yeah, into any one position.
Hmm. Okay, copy open trades at all times, even when adding funds, as I'm about to. Uh,
Great.
Hobbies, sharing investment research and ideas on my YouTube channel, yoga and weightlifting. Not at the same time, I presume.
Yeah, I mean it's something to de-stress. Yeah, helps.
Very good. For more details, please refer to the pinned post. Let's have a quick look at your pinned post.
Sure.
Core principles of my strategy, and we will get into these later on, so we can just run through them in bullet point form for now. Concentrated equity portfolio, no more than 12 stocks, ETFs to manage volatility, always between 10 to 70% in cash, no leverage, no leveraged ETFs or any creative leverage methods. Focused on protecting the downside. Yearly drawdown is under 10%.
Right.
Okay.
So that kind of ties into why I haven't mentioned target returns in the portfolio. So I can't guarantee the upside that I can, deliver to whoever's invested with me. But I always focus on the downside. So I have this regular habit of taking a look at everyone who's invested with me, who has the largest loss in a way. And I think that's at around 2.5% today. So, the market's been dropping quite a bit over the last 2 weeks. It had a little increase yesterday or day before. But yeah, what I try to do, the target downside is that no one should be at a loss of, around 10% or more.
Okay.
So that's kind of why I've mentioned the 10% yearly drawdown in the pen post.
Yes, because some people, when they look at a bio, by some people, I mean, in particular, Felix Felix loves to see people put a benchmark there, what they are aiming to achieve, what their copiers can expect to achieve. But you think that's of limited value?
I think no one knows. I mean, nobody knows what the market will do tomorrow. As PIs, our focus should be about protecting the downside, and then if we're able to delivering alpha being above market returns, there's no guarantee of how much we can deliver. I don't think so.
Okay. I'm just going down on through here, your pinned post. A few other points I'd like to talk about.
Sure.
It says invest with a 4 to 12 month time horizon. We talked about this another time, but my plan is to stick with my 4 PIs for the first 12 months on eToro. You being my number one guy.
In returns or in the portfolio allocation?
Both.
Or both?
Yeah,
Oh,
which is
okay, great.
pretty handy. Yeah, my portfolio allocation and the returns I've got from each PI are completely aligned, which makes me think
Oh,
I'm a genius, but I'm the only one. Assess if my risk return parameters suit your criteria. $500. Always copy open trades even when adding funds. Okay, that's excellent.
yeah. So the 4 to 12 month time horizon that I mentioned, the reason for that is like we saw with Nordstrom, it takes around 3 to 6 months for the entire investment case to play out. So if someone comes in and invests and then thinks, okay, I'm going to make 1%, 2%, get out next week, that's not how businesses work. That's not how an investment process works, at least not for my portfolio.
Mm-hmm.
So that's why I always suggest have that time horizon that allows for the entire process, the entire story in a way to play out.
Absolutely. Yeah, it takes time for the thesis to realize itself.
Absolutely. Yeah. Good things take time.
Yeah, and it's often the one thing that you might get a little bit wrong is the timeline. You know, you may see your catalysts, you may have an idea that something's going to happen in 3 months, but it's not unusual for it to take 6.
Yep. We're dealing with businesses. Yeah.
There was one company that caught my eye that you kept making videos about that I'd never heard of. And I remember saying to you, well, you've obviously got a lot of conviction in this position. Let us use this as a test case. And, you know, if this comes good, it shows that you know your stuff. That position, would you like to reveal what that company was?
Yeah, GameStop. GameStop, the company that kind of shook the world a little bit.
Yeah. And you were in on GameStop way early on. Would you tell us about that?
So in the eToro portfolio, I bought it at around $4.5. That was the first buy price. And I kept buying around $6, $7. When Ryan Cohen actually got involved in the company, it was in August, around August, end of August. So after that news, it had shot up to like 14. I was still buying. And because in my head, it was almost dead obvious that this stock is going to at least 25, 30 by Jan to March. So the time frame that I had gotten in was around 7 to 8 months, and I make a 5x in that time frame. Because so there's a lot of catalysts that were going on with GameStop. When I was buying it for $5, the stock in the company had cash of around $12 per share. And even if you were to pay off all the debt, it still had like $6 per share in cash. And the share price was at like $4.5. So you're basically getting the entire company, everything else, their stores, all their inventory, everything for free. You're just paying for the cash that they have. And the huge catalyst that was there for GameStop was the gaming console cycles. So the PS5 and the new Xbox that just got released. And for some reason, it wasn't priced into the stock. So we could see that, there's going to be like huge cash flows. The cash flows are going to dramatically increase. And the company's priced for bankruptcy. So, there's like a huge discrepancy between perception and fundamentals. So I got in when, everyone was pessimistic on the company. And then, the short squeeze, I could not have imagined it'll go to like $300, $500. For me, I was ready to sell at like $30. And that's kind of where I first sold, by the way, also. So my last buy was around $14. My first sell was around $30, $35. So that was the thing with GameStop. There was actually one key factor that made the short squeeze as incredible as it was. So back in 2019, Michael Burry actually got the board of GameStop to approve share buybacks of around 30-35% of the entire company. So that's why there were so few shares outstanding. And that is what really squeezed, the short sellers. Yeah. In fact, he'd asked the board to buy back around 80% of the outstanding stock. So you can imagine what the short squeeze would have been like if 80% of the outstanding shares were bought back. There's no shares to cover the shorts, right, at that point. So the person who kind of orchestrated this really was Barry. So Barry manages money for other people through his Scion Asset Management Fund. And I can completely understand why he would get out and not wait for the entire short squeeze. Because even I myself was selling out way before the short squeeze really happened. So I told you I started selling at $30, 40, and then again I sold some at 60. And the reason for that is because you have to keep booking profits. You can't just hold on and let the stock just take control of your portfolio. Because at that point, when the stock keeps increasing at that rate, 100% a day, it really affects the entire portfolio, right? So I guess the reason he got out was more portfolio management than anything else. Because I'm sure he would have, you know, been able to at least get a higher price for the sale if he wasn't managing money for other people. So there's a bit of portfolio management there. Yeah.
Well, it was certainly a big win and left me in no doubt that there was something to this Karan chap. I'm glad to say I started copying you on eToro before GameStop went crazy.
So I guess you got all of it, or most of it at least, most of the return.
Yeah, most of it.
Nice.
The only disappointment, if there is a disappointment, is that it was my initial investment in eToro. I thought I'll put this amount in, we'll give it a few months, and then I'll build up my balance.
But we had some big wins even before GameStop. Were you in those? The
Oh, sure.
Nordstrom and the Zooms, were you there? Or around when did you first get invested?
It was the last day of November.
Okay, so I think in November it was around 13%, 13 point something. December was 7%. So I guess you get that entire 7% and then the 95% from Jan.
Yes, that's right.
You got in at the right time, basically.
It was a very good time. And just in case the listener thought there was a glitch there wasn't. You did say 95% return in January, correct?
Yeah. So we were able to get all the upside from the stock and thankfully none of the downside because of the risk management that I have built into the portfolio. So the portfolio didn't drop after that. Yeah, in Feb we in fact went up again another 1.8% after getting the 95% in Jan. So good return, yeah.
Yeah, which is nothing to be sniffed at, but when you compare the two towers on the on the stats chart, one is an enormous skyscraper and it's next to, what would normally be a reasonable return pales into insignificance beside that January colossus.
It becomes, to be honest, for me, it becomes insignificant because I'm like, okay, let's go to the next month. Let's see what we can do in the next 6 months.
Sure.
Let's try to replicate that same return and not same, but another recent return.
Yeah, it's a constant game.
Yeah.
I mean, you can't rest on your laurels with your January result and just hope to cruise through the rest of the year.
Yeah, I mean, I could not do anything and still outperform, but I'm not really competing against anyone else. So not even the S&P, not even any other PI. So just focused on my portfolio, my returns. So yeah, I'm going to keep improving that.
And the risk with that is you could be labeled by others as a one-hit wonder with GameStop. And there's so much more to your investing style and successes. You mentioned Nordstrom a minute ago. Can we talk about that for a moment, about what your investment thesis was in Nordstrom? Because to my mind, when I heard that initially, that made me think, oh, this guy is on the ball. He knows what he's doing. I like the sound of these catalysts.
Mm-hmm.
And that worked out exactly as you imagined it would. Tell us about Nordstrom.
So we actually got into Nordstrom and it was around $11 per share, $12 per share. And within 2 months, I was able to exit around $30 to $33 per share. So like around a 3x, but it wasn't entirely a 3x because I was taking profits well in advance of that. So around a 2 to 3x, somewhere in the middle of that. But the main idea with Nordstrom was that after their earnings were announced, the stock had dropped quite a bit because a lot of the market participants are very short-term focused. So they just saw that, okay, bad earnings, pandemic, everything, we have to get the stock, we have to start selling off the stock. And at that point, the short interest in Nordstrom had gone all the way up to around 40%, a little bit more than that, around 40 to 43%. So what I was seeing was that a stock that was disconnected from the reality of the business, the fundamentals. And I couldn't help but take advantage of the irrationality in the stock price, where I saw that, okay, clearly the fundamentals are not as bad as the stock price reflects it to be. So I was able to buy in at that point. And then I even averaged up. So I bought in at 11 first, and then I kind of averaged up to when it was around 12, 12.5. And then I'm like, once this catalyst plays out. So the main catalyst, by the way, was that the anniversary sale, which is like the huge sales event, was pushed to the next quarter. So the moment when the anniversary sale happened and people finally got wind of what's actually going on with Nordstrom, the stock price went up, 2x, 3x. That was pure irrationality in those 2 months. So we were able to take advantage of that entire uptrend and again exit at the price of 30, 33, where I said, okay, this is priced around fair value. I'm out. And then I took the profits from Nordstrom and then put that into another position, which happened to be GameStop. So it was like profits on profits. Yeah.
Oh, fantastic. Hey, hope you're enjoying today's show. I'm sure you've subscribed already. If you're a successful copy trader, happy to share what you've learned. There's no need to have a public profile. Please get in touch. Otherwise, listener, the bigger the club, the better for you. So tell people on eToro about this show. Ask your PIs to come on. That way you will get to know them better. We build this club together. Well, those are two excellent examples of your recent successes from your method. Can we talk a little bit about your method generally? What is your approach? What I'm thinking here is, in both those examples, there was short interest was an element to it. So can you talk a bit about that? Can you talk about what catalysts you look for, what sort of time frame you're looking for price movement over?
Sure. So there are multiple strategies at play in the portfolio. Although it does seem like a very concentrated portfolio, each position is there for a different reason. So short interest was a common factor in both those holdings, Nordstrom and GameStop. But there's another framework at play, when looking at international stocks, such as, say, Gazprom. So we were in Gazprom when it was around just below $4, and I'd sold out when it was around $6.2. So completely different framework, completely different area. So there are multiple strategies at play here. The reason for that is that, there's not one consistent approach that works all the time. But the underlying philosophy between all the strategies is pretty much the same. It's to buy something when it's far below what I presume is the intrinsic value, and then sell it when it's around intrinsic value or slightly above.
Okay, so you mentioned the concentrated nature of the portfolio. Would you like to tell us a little bit about how it looks right now at the time of recording and whether that's typical?
Sure. So at the time of recording, I think I have just maybe 6 stocks in the portfolio. So there's Align Technology, Pershing Square, Twitter, and Moderna, Pinduoduo, and Baidu. So those are all the stocks in the portfolio. And there are 2 ETFs, which is the IWM and the SPY. So SPY is focused on the S&P 500 stocks. IWM is the small cap index. And yeah, so that's typically what the portfolio looks like. I tend to have less than 10 names, 10 companies in the portfolio. And the reason for that is because I actually want to know what's happening in the businesses. So when I'm invested in something, I want to keep up with it. I want to know everything that's happening with it. And I cannot do that for more than, like, the more stocks I have, there's a dilution in the attention that I can give each and every position. So I'd rather have a few, but know what I'm holding rather than just having a whole basket of stocks and then praying that, everything does well.
So that's straight out of the Charlie Munger, Phil Town playbook. own a small number of stocks, know what you own,
Yeah,
and
yeah,
then you
yeah.
won't. It removes a lot of the emotion when prices fluctuate.
It really does. But unlike their approach, it's not more of a buy and hold. I am willing to cut positions if suddenly, the position tends to fall. I do cut positions. So I have a set number at which I would sell out of stock and then reposition, get back in maybe with a different portfolio allocation. Maybe there'll be some changes. So an example of this is actually Pinduoduo. Pinduoduo is a stock that I am bullish on in the long term, but it's extremely volatile. So initially, I started a position with it, and then I took some profits, and then the stock kind of crashed. So then I decided, okay, rather than just getting out completely, I did get out completely. The stock did fall further, and I got back into it with a larger position size. So you get it. Like when it drops, it becomes less risky. As the stock price goes up, it becomes more risky. So to balance the risk out in the short term, I do tend to take profits and then again average in with a different position size. So that minimizes the volatility in the portfolio in a way.
And your ETFs are also there to minimize volatility.
Yeah, so the ETFs, the reason they're in the portfolio is to reduce the standard deviation of the returns. So the volatility is muted in a way due to the ETFs.
Mm-hmm.
Yeah.
And Pinduoduo is, I heard you talking about this before, saying how it is negatively correlated with Alibaba. Is that correct? Alibaba's
Yeah,
loss is Pinduoduo's gain, more or less.
I'll probably make a separate video talking about Pinduoduo. Like I don't want to get too into it because I'm still trying to establish the right position size with it. Yeah. So it's maybe a position I'll talk about later separately.
Okay. So obviously the first reaction that most people would have to your portfolio when comparing it with others on eToro is, goodness me, there's not enough diversification. And now I know you've mentioned your approach and how you like to concentrate on a small number because you like to know what you own. Do you have copiers questioning why you own so few stocks?
So in a way, I feel really lucky to have very understanding copiers, and I keep making videos, and I'm always engaging with them and telling them what I think about each position. So I imagine that the like majority of the people who are invested with me understand the strategy that I'm trying to you know use here. And yeah, I haven't had too many questions about the diversification of the portfolio, but I have had questions regarding the cash position. And I keep trying to explain that okay, I'm only looking for the best opportunities. That's why having cash in the portfolio is just a function of the process. So, like I mentioned earlier, when something is below intrinsic value, my expectation of intrinsic value, I'm buying into the stock. As the price goes up and I keep taking profits, the cash will tend to accumulate. So, cash is a thing that people have had a lot of question about, but not so much about the diversification in the portfolio.
And you currently have about 45% cash position.
Around that, yeah.
And is that the norm?
So the norm is around anywhere between 10% to 70%, which is a huge range. So, for example, like back in January, like beginning of January, end of December, I was under 10% in cash. So at that point, I was extremely bullish on my holdings. So I kept averaging into them, even though they were at a higher price than what I was in at. So even if there was no GameStop in the portfolio, we still would have at least gotten a solid 6 to 7% return.
And of course, one of the reasons that your copier rate has rocketed, of course, is GameStop.
Yeah,
And one of the risks with that is you see all these numbers of copiers pouring in, and you might think, oh, they're chasing the big numbers.
of course.
But so far, You found your copiers to be understanding of your process and displaying patience. By the way, I notice you've just breached the 1,000 mark.
I have.
Congratulations
Thank
on
you.
that.
Thank you.
Well done. That's fantastic. I wonder how many thousand it will be by the end of the year.
I hope whoever's invested makes a lot of money. That's my expectation.
It's not your focus to build copier numbers, I'm sure.
It's my focus to deliver returns and make everyone who's invested with me a lot of money. So that's really what I enjoy doing. I like eToro because of that reason. Yeah.
Good news. Deliver the results and let everything else take care of itself.
Of course. Yeah.
Well, maybe we could stop for a moment to just address what an extraordinary thing it is that copy trading exists. I mean, I've only come to the platform a few months ago, right? And I can still hardly believe that this facility is possible.
Yeah, copy trading is actually the feature that got me on it too. So a friend of mine wanted to invest with me, and he wasn't sure how to because I didn't want to take money from him directly. Because when you take money, there's a lot of other stuff that comes with it. Sort of maybe there might be friction or whatever. eToro kind of gave this perfect solution where he could put in the money and be invested with me, and I would manage my portfolio the way I do, and he would also benefit from whatever I was doing. So that's kind of what got me onto eToro, the copy trading feature.
As we mentioned earlier, we sort of come from the school of value investing, if you like. That's too grand a term, but you know what I mean. And among these YouTubers we talk about, one thing they always like to focus on is 13F season,
Yes.
when the big investors release their portfolios and you can see what activity they've been up to that quarter.
Mm-hmm.
Now, when I first heard of that, I thought, oh, this is the greatest gift that I've ever come across. I can see what these amazing people have bought.
True.
But there are a number of downsides to it. There are limitations to it. You're usually several weeks behind them. You don't know what price they bought in at. You have to still do all the work yourself to convince yourself you know what you're doing. And if you don't know what you're doing, you don't know when to sell. And if you don't know what you're doing and you don't know when to sell, the only indicator you have is when they sell. And again, there's a several week time lag on that. So there's still plenty of room for making a mess of things when cloning the super investors.
Okay.
But that, I think people can, and I certainly know I'm guilty of this, my focus on the circle of competence shrinks because the super investors are involved. You know, I sometimes think to myself, and I know this is a weakness, but I think it's a very common one. Okay, I maybe don't know this thing inside out, but Monish is in on it, so it can't be all that bad. And of course, the distinction between that and what copy trading is night and day in terms of the fact that you get in when your investor gets in, you get out when your investor gets out. You don't have any of the emotion to deal with because the decisions are out of your hands, and you can enjoy watching.
I'm making money on it
with a sense of removal, even though you're involved and you're invested.
Yeah, and you're still making the return. That's the best part.
Like for GameStop, for example, I was involved in GameStop and I was watching the news and every video that came out, and I was, oh, this is going on, this is incredible. But I had none of the stress. The main problem, or not a problem, but the main distinction is you don't have Monish Pabrai and Phil Town with eToro accounts, unfortunately. So you've just got to find up and coming superstars of tomorrow.
One of the best things for me about eToro is like, okay, touch wood, I don't know if it's luck or if it's ability, but I kind of just feel like I have an idea, okay, how do you analyze a business? And to be able to, benefit so many people from this ability, I don't think I'd be able to do it like 5 years ago because eToro maybe was not as popular then. But now it's a great space, that connection that, I'm able to invest and generate returns for so many people. It's really meaningful to me. Yeah. It's great. Like some people have actually reached out to me and they've said, like, okay, I work here and, I'm invested with you. And it's really nice that, someone's like putting up like, okay, whatever they can save at the end of the month. And I'm able to grow that at like, okay, like 2-3% sometimes in a month, compared to a bank where, they would get like maybe 1% annually. So, it's like people work so hard for their money. But, at some point, the money has to work hard for you too. And this kind of gives a lot of people, like the retail investors, that opportunity. So that's fantastic.
Okay, before we move on from your portfolio, can we talk about a couple of the positions you have in there, which are quite interesting? You're clearly a contrarian, and you love nothing more than putting up a video where you're musing about a certain investment and then watching all the comments coming in telling you you're a lunatic, you don't know what you're talking about, this thing's going to zero, and you're in the still of the video there rubbing your chin and looking off to the side deep in thought.
You're talking about the Twitter video.
That's exactly what I'm talking about. So so tell us about Twitter. Why Twitter? Surely people are leaving in droves and it's one of the worst social media platforms and it's not going to be around in 5 years.
Perhaps not. I mean, there's a lot of changes that are happening in the company. So people are again stuck with the stock price. They're stuck with the emotion, the whatever the emotions are around the company. They're not looking at the 2 billion that's come in from activist investors. That's changing the company. They're not looking at the new acquisitions of Twitter. They're not looking at Jack Dorsey talking about the revenue is going to double by 2023. They're not looking at all the other things that actually matter. It was the same thing again with GameStop. So the fundamentals are what drive, the stock price at the end. I know with GameStop actually is a bad example because there was a short squeeze. So that's the stock. But it's always the business, the fundamentals that actually drive the stock price. Same thing with Twitter. Like it was, I think, around $27 right at the lows in March. Today it's around almost $80, like around $73, $74. So this company is changing fundamentally. People are not recognizing that. I could even see it going to 150 in the next, say, 12 months, which is a double from its current price. So there's a lot of interesting things that are happening with the company. Yeah.
Is Dorsey going to remain at the helm?
So the standstill agreement actually comes to an end this month, and we're going to see. It seems like he's going to stick on because his approach has really changed. I'm pleasantly surprised by it. So prior to the pandemic, he was talking about how he wants to go to, Africa and like handle things from there remotely. And now he's like, we're going to focus on the revenue, and we're all charged up to make Twitter into what it's supposed to be. They're going to start monetizing the huge number of daily active users. So we haven't heard Jack Dorsey say all this in the past. That has fundamentally changed. The founder, the CEO of this company has pivoted and is, making sure that there are returns to shareholders. Anyone who could understand that entire story is benefiting from the stock. And I think will continue to benefit in the long term.
And can he continue to operate Square and Twitter?
I don't know. We're going to see by the end of this month. So let's see what happens, because it's a story in progress. Yeah.
Square never caught your eye, did it?
Not really, no. I don't want to comment on it.
Okay. All right. We'll comment on Pershing Square. Tell us about that.
Oh, Pershing Square is brilliant. So, um, in Pabrai's recent talk, he talks about wanting to buy the mothership of spawners, which was, Chamath basically spawning the SPACs, right? Did you hear that talk? The recent one with the, um, I think, Peking school or Guangzhou, some school.
Yeah, well, I've seen the highlights.
Okay, so he was talking about how he wants to buy into Chamath Palihapitiya's main company if he could, at a decent price, not at a huge premium, and because it was spawning all these packs. It's pretty much the same story with Pershing. So Bill Ackman has announced that there's going to be a second SPAC with Pershing, So they have PSTH, which is Pershing Square Tontine Holdings.
Hmm.
And that's the SPAC that they currently have. And what's in the fine print of Pershing Square Tontine Holdings in the SEC filings is that Pershing Square Holdings has forward purchase agreements for the SPAC. And it's not at all priced in to the stock price of Pershing Square Holdings. Am I losing? I mean, am I getting too into it?
No, get into it by all means. That's what we're here for.
Yeah. Yeah. So the fund itself trades at a discount to NAV. So that's net asset value. And it was trading at a 50% discount to NAV when I first started buying in. And then it's decreased a bit now. So it's trading at a 30% discount to net asset value. And there's no news about the forward purchase agreements in there for the first SPAC. So now we have the benefit from the first SPAC. We have the reduction in discount to the net asset value. And plus, now we have the second SPAC. So there's quite a bit of upside with Pershing Square Holdings, but the downside, which is what I'd like to focus on, is relatively capped because again of the holdings, because of whatever the company, whatever Bill Ackman has been able to do so far.
Hmm. And there is a specific video on that on your channel, isn't there?
Yeah, so I've actually made two videos about Bill Ackman. The first was that comparing him to investing with Warren Buffett back in 1999. So, in my opinion, investing with Bill Ackman is similar to that because the way he looks at businesses is similar. He's got quite a few mistakes under his belt. So he had J.C. Penney, he had, of course, Valiant, Herbalife, all that. So those sort of scars have made him into a better investor, in my opinion. And I'm really betting on the jockey here. So I think Bill Ackman is going to produce some fantastic results over the next say 20 years, and it makes sense to be invested with him. Yeah. Oh yeah, and the second video is about I explain the entire process, how Pershing Square actually has the forward purchase agreements and all that stuff. Yeah.
You mentioned the market movements there recently. Uh, there's a lot of talk everywhere about the market crashing. This is a crash. It's going to crash. Run for the hills. And then there's a lot of people saying there's no chance of a crash. Nobody knows. But
Yeah, nobody knows. Absolutely.
maybe you could give us an idea of how your approach might change, or what would you do with your existing portfolio in the event of a sudden crash, and how would you look to allocate the cash that you have on hand?
Sure. So, in terms of looking at the broader market, I generally tend not to because I have no idea and I have no way of figuring out, what will happen. I like to just focus on the businesses that I have. So I'm more concerned about what is Twitter doing next. Like they've recently had a bond offering, right? I want to know details about that. I want to know more about what they plan to do in the next, say, 3 months. What's the link, to the recent acquisition that they had? How are they going to integrate that into the existing plan? That's what matters to me. You know, what are the companies in my portfolio doing? And that's what drives the stock returns, even in the short term and the long term, irrespective of what the market does. So, so yeah, that's just my approach to it.
Does that mean you've got a wish list to hit when prices get down into the sweet spot?
Sure, everyone has stocks that they've got their eye on, but yeah, I mean, I like to focus majority of my attention on what I have at the moment. And I'm okay with, like, buying into those same businesses at a higher valuation if the intrinsic value is actually far above, what the current price is at. So rather than focusing on a wish list or outside the portfolio, I like to focus more on what I have at the moment.
Okay, great. So, one thing I like to ask my guests on this show about, or I intend to ask them about, is how they would be as a copy trader. The whole idea behind this show is to help me and the listener improve as a copy trader.
Of course.
And there are so many elements to that. I think of copy trading as a branch of investing, not as an alternative to it. So I think it needs to be explored, all the decisions that go into your copy trading practice.
Yeah.
So, as an investor yourself, how do you think you would be a copier?
So I would have pretty much the same approach that I have right now to my portfolio if I was copy trading. What I mean by that is that I would take a look at maybe 3 to 5 PIs who fit my criteria, right? So maybe I want to have someone who is focused only on equities. So maybe 1 or 2 people in that. Maybe I'll have someone who's into another asset class, that I want to have in the portfolio. I wouldn't probably go for someone who has a mix of asset classes because I'm more of a believer of, like, okay, invest in what makes sense to you. So that's the kind of PI that I want to invest with.
Well, I'm heartened by that because it sounds a bit like my portfolio. I have two main stocks guys, stocks and ETFs.
Okay.
I've got one guy who's a volatility trader,
Nice.
and another guy who's got a sort of a few different things, commodities, forex,
Hmm.
and they are smaller positions because basically at my heart I'm a stocks guy,
Okay.
and diversification. My eToro portfolio isn't the most diversified thing you can lay your eyes on, but diversification is all about spreading your risk as a human being, and I'm diversified outside in my life, in other areas. So,
Hmm.
so I'm pretty happy with that, and I'm happy to be backing a PI like you, who's on the surface not got a sufficiently diversified portfolio, because I totally believe that it's what you need to know what you own. I mean, that makes just such perfect sense to me that I can't imagine how anyone can keep track of 50, 70 positions.
Yeah. Yeah. So if you look at the great investors, like, say, Buffett is extremely concentrated in his approach. And at the other end, you have another great investor who's Peter Lynch, right, who managed the Magellan Fund. And he had like thousands of stocks in his portfolio. Both of them outperformed the market, right? Both of them, again, produced fantastic results for whoever was invested with them. And what I'm basically trying to say is that there's more than one way, to get to the land of great returns.
Mm-hmm.
So some PIs are able to achieve that with like 50 stocks because they have the capacity to keep up with 50 stocks,
Mm-hmm.
right? It's a good approach if it works, if they're able to deliver on that. But people like me, we just focus on maybe 5 businesses at any given time. Like at one point, I had just 2 stocks in the portfolio. And I think this was like back in uh, September, I think. We just had GameStop and Zoom. And the market was kind of going down then. But I was fine. I was doing well, in fact. It was positive because I knew what I owned and, it was going to do well, irrespective of what the market was doing.
Mm-hmm.
You know, again, kind of it goes back to the whole thing. Invest in what makes sense to you, and you will probably do well. Yeah.
And in terms of the timeline, I imagine you would get behind your small number of PIs and stick with them over the long term.
Yeah, I mean, you got to give someone time for their entire investment approach to really come into effect. So, so yeah.
Do you think that's a common error made by copy traders, hopping around too frequently?
I mean, everyone has, I think, people should do what they're comfortable with. So, investing is not for everyone, I think. So, I think Buffett has this line where, he says, um, some people are not, fit to own common stocks, because owning common, like investing, it's not so much about, it's not a, it's not about how intelligent you are. There's a lot to do with temperament. So temperament is a huge factor when it comes to investing and your returns. And sometimes maybe getting in might work, but mostly you have to kind of stick to a strategy. Investing, when it's done properly, is actually really boring. So you kind of have to get in and then just wait, and then go about, do something else, and let your money actually work for you.
And the same is true of copy trading.
Yeah, investing, copy trading, all of it.
Great. Okay. I like it. Okay. Well, before we wrap it up here, uh, would you like to give me your thoughts on the idea of having this podcast, Copy Traders Club? What content you think we might want to include? Have you any thoughts on that?
I think the fact that you're making a podcast which you would really enjoy listening to, so you've at least got yourself as the audience. You've always got an audience of one. That's a good thing, right?
Probably for many months.
Yeah, at least not two, because I'll be tuning into your
Oh, okay.
podcast too.
Good.
So
100% increase.
yeah, that's great returns, right? So yeah, I think just making the podcast that you love, that you really want to listen to, it'll resonate with other people. And people want to know more about their PIs. I feel like a lot of PIs should actually, be more connected with the investors. So I think this podcast will serve as a great avenue for people to get connected with, people who are looking to get invested and people who are currently invested. I think it's a great platform. Yeah.
And I hope that people have gotten a lot of value out of what they've heard from you today, gotten to know you a bit better. Maybe they're already copying you. Maybe this might inspire them to check you out on eToro. So thank you so much for doing this, Karan.
Thank you so much for having me. Yeah,
Maybe you'll come back in 6 months' time and give us an update.
of course. I would love to.
Okay. Thank you so much, Karan. All the best. Bye bye.
All right. Take care.
I hope you enjoyed that chit chat and got some value from it. Certainly some insights into the mind of Karan Mohan. Huge thanks to Karan for his patience through the technical difficulties we had. By technical difficulties, I mean unwitting sabotage by my 6-year-old boy. Coming up on the next episode is a chat with a copy trader called Victor Zhang. Here is Victor in his own words.
I am the best copy trader that I know on eToro.
So that'll be fun. Until we meet again at Copy Traders Club, I wish you many happy returns. Obviously, anything you hear on this podcast is for entertainment only, not financial advice. Do your own research. This is just generic chit-chat. We don't know your individual circumstances, etc., and so forth.